Hello traders, this is Trader K from Trade Like Gann. Today I'm here to discuss about one of the most important factors of the market, you can say, and one of the most important factor for us to analyze the market as well, right? Because if we don't understand what drives the market, then how are we going to be able to analyze it, where it's going to go? So let's get started with it, right? The topic that we are going to discuss today is volume. Okay, you may have seen the thumbnail by now. It's volume. Okay, so let's see where W.D. Gann talked about volume. He actually discussed about volume in a lot of places in his a lot of books, but I choose this one, which is from the master stock course, which file you can easily download from Trade Like Gann and from this Gann books, and you'll be able to find it pretty easily, and you can use it from there relatively easily. Okay, so why this one is clean, and this one consists of rules that can be applied to the market to derive a certain type of result. That is it important or not? Then we are going to come and discuss about all of this commentary that W.D. Gann did from 1930 till 1935. Okay, almost 5 years he recorded and kept record of volumes and talked about how he analyzed it. Okay, so later on in the video we'll be discussing that. Okay, so first let's read the rules. Okay, but before that, one small paragraph I want to read for you all. After considering three most important factors: formations, okay, the first important factor is formations, time, resistance levels, okay. The fourth and next very important factor is the volume of sales at tops and bottoms. Again, watch it. It's not only volume of sales, rather it's volume of sales on tops and bottoms. Okay, and he goes on further discussing about volume, and this is truly remarkable. Like, this is now 85 or more years past when he had written about this. The volume of sales is the real driving power behind market. This is correct indeed till date. Okay, and this is very important information. Being a trader, you need to know, otherwise you'll not understand when it's going violent, or when the market is moving faster than other times. Okay, this is quite important for us to understand. Right now, let's focus on determining the culmination by volume of sales. Rules for determining the culmination by volume of sales. Okay, there are in total two rules. Actually, he has written specifically for the bulls and bears separately, so there are four rules. Okay, let's read the first one. At the end of any prolonged bull campaign or rapid advance. So this is the first case. Okay, remember, we are in a bull run right now. Okay, let's do one thing. I have actually made a schematic for you to keep it easy. You can remember it pretty easily. Okay, let's open up the schematics first. Okay, I hope you can see this schematic. At the end of a prolonged bull campaign or rapid advance in an individual stock, we are in an uptrend. Okay, and at the end, almost at the end, there is usually a large increase in volume of sales. So the top will have a huge volume of sales increase. Okay, which marks the end of the campaign, which marks the end of the campaign. So theoretically, this is exactly the end of the campaign, or at least temporarily, or it can actually retrace and jump up again. Okay, so at least temporarily, either it is the end or temporarily. Then after a sharp decline on heavy volume of sales, so this is a sharp decline after the stop, it will happen, and it will have heavy volume of sales. So I have written the first move with good volume. Okay, when secondary rally takes place, the volume of sales decreases. So this move should have lower volume, the secondary top. Okay, this one should have a little bit low volume, so the volume decreases. It is an indication that the stock has made final top and that the main trend will turn down. You see, in his rules, he hasn't actually wrote this, that you need a break with a good volume. But this is something that I have added up for an extra layer of protection. So this is the rule. This is the rule, vice versa. That's all. If a stock holds after making a second lower top and gets dull and narrow here, okay, for some working days in a sideways movement and then breaks out in increased volume, it is a sign of further decline. This rule, okay, this exact rule that I added for this one is the main rule actually. Okay, so these are the rules for us to identify tops and bottoms. Okay, we should have another schematic for the uptrend as well. Okay, so I'll leave these two files for you to have a better look. So you can find this in the description box. Now, the most important factor that we need to consider, which is not written like rules but is a rule, is mentioned here. These rules apply to the general market, that is to the total sales traded in the New York Stock Exchange daily, weekly or monthly, as well as to individual stocks. Okay, again, daily, weekly or monthly. So these rules are only for daily and above time frames. Okay, so daily, weekly or monthly, remember. So this makes this strategy a position trading strategy. Okay, so now let's get to the market and let's see how we can implement it. For the first example, what we have here is NFLX. So let's analyze maybe this top, this bottom, and maybe some other tops. Okay, so first analyze this top. Okay, so the rules were what? The top at the end of the bullish campaign, it should have increased volume. Okay, it should have increased volume, then a sharp move down which will have more volume, and then a secondary top with less volume, and then the break with a good volume. That's all, right? 4 steps, that's all. In this case, we see the volume, the highest volume, the peak of the volume is roughly here. It's around the top. Okay, so this is acceptable. And then we see a sharp decline where there is an increase in volume. Okay, and then there is a sideways pattern and the secondary top with low volumes, you can see low volume, and then break of this entire section with decent and good volume, decent or good volume, which we see here, right? And then market started going lower. Okay, so you see, watching volume in this manner nowadays is tough because the volume of sales is becoming more confusing to us nowadays. Okay, before like 85 years when WD Gann was trading, the volume of sales was not so symmetrical. Okay, so we have to apply a little bit of technique to understand or make it easy, make this strategy easy. So what I have done is added an indicator called on balance volume. What this is literally the accumulation of volume, that's all. But what it does, it enables you to see this volume levels, where it's increasing, where it's decreasing a little bit more easily. Okay, it's reliable, and it's why reliable, because it's literally the same volume just shown in a different manner. Okay, just the cumulative, that's all. So now we can see the same thing. You can see the highest volume is here, and if we zoom out you can see the volume were pretty high at this point for the stock, right? So high volume first spike down with with good volume, definitely, but price is coming down, that's why it's showing lower volume. But the first spike down is also with good volume, we have good volume. Okay, so just see these two things, you'll understand what I try to mean. Then in the secondary top, where the market is going in sideways or creating a secondary top, volume is quite low, right? It's also literally dried up volume, we can say. And then it breaks down with stronger volume or higher level of volume. So when it goes down, that does not mean that it's low volume. Rather, the volume is more concentrated on the downside. That's why. So if you see spike up, so that's high volume. If you see a spike down, that's also a high volume. Okay, so it's up to you if you want to use this indicator or not. This is quite simple way of understanding this setup. This is how you can use it. And then let's go to a different example. Let's try to understand this law. Okay, since we are here, let's open up this volume chart. So around low, we supposed to have very low volume, right? And we are at the bottom here. Okay, just the bottom, exactly. So this, you can see very low volume, and the volume is also quite dry here, not increasing that much, though price is increasing, so it's quite low volume, we can say. Then the first spike up, okay, with decent volume. So the volume is adding. Okay, you can see the the candles are, the volume candles are pretty small, right? But it's many days, like, let's see how many days. It's roughly a month or 17 working days, right? So in 17 working days, it added a lot of volume. So the first spike with good volume, the secondary bottom, and in this case is supposed to have dried volume, which we can see when market started going down, it was kind of dried volume. And then when this breaks this zone with hard or very powerful pace, or you can say very high volume, that is our entry, and which is very evident and clear here. Okay, so we watched two examples, one example for the uptrend, one for the downtrend. I'll leave the schematic, and if you have any questions you can ask on the comment section. I'll leave this comment section open. Okay, and now let's go back to the PDF and let's look at what he is talking about here. Okay, monthly record of volume of sales on New York Stock Exchange from 1930 to 1935. To understand the importance of volume, a study of the total number of shares traded on the New York Stock Exchange is necessary. Okay, he's clearly saying that this is important. Okay, so these are old data, though I can open up from trading view, but it is better if you have purchased this data, because there are a lot of sellers who sells this data, old data. Okay, if you can have that, that can help you. Okay, let's try without any data. Okay, sales were 1930 June. Sales were 80 million shares with the market moving lower. Okay, so it's you can see a downtrend kind of situation what we are seeing. Okay, then July and August, on a small rally, the sales were only 80 million shares for 2 months. Definitely there is decrease of volume, right? In September, market was slightly higher early in the month, then decline started with carried prices to new low levels, sales of 50 million shares being recorded. Again, we can see relatively lower volume. Okay, because the market started in the early month up and then declined. Okay, so the market opened up and went slightly higher and then declined with lower volume. October, market broke to new low levels. Stock at this time broke to the low levels of November 1929, and the sales increased to 70 million shares. Okay, the December again, the Dow Jones Industrial Average declined 46 points under the low levels of 1929. The total sales this month were 60 million shares. So from this 1 month, you can, if you try to imagine the exact same schematic that I showed you. Okay, so I advise highly that you go through and read this entire chapter, which is not very long. Okay, have a great day and we'll see you soon. Bye.